All right. Back to work. Hope you guys had a great weekend. Hope you got some rest. We had a big week ahead of us. Third week of the month of April. We got earnings kicking into gear this week. We got some beautiful charts in front of us here tonight and some fantastic trades we're tracking for not just tomorrow, but the rest of the week here as we go to the third week of April. I have a lot of great trades. I want to make sure that you are ready for tomorrow. I'm going to cover all my favorite ideas, my favorite trades in the video tonight. Then we get a game plan to make some money on Tuesday. Before we jump in and get the game going tonight, as always, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoyed the video tonight, do me a favor, hit that like button. Give me a shout out down in the comment section below. Thank you so much for tuning in, supporting the YouTube channel. But enough of the intro. Right, let's get ready for Tuesday. Tuesday is setting up to be a really, really good day. Boy, the name of the game tomorrow is Breakout Pullback. Breakout Pullback on a bunch of ranges on the charts right now. Range on the S&P, range on the Nasdaq, multiple ranges on the crude oil. We get a bunch of earnings tomorrow morning. Tomorrow we can start firing away on some earnings reports. We'll talk about that in a moment, but we have a beautiful, what we call a slingshot reversal or slingshot breakout in the on the S&P right now. We get some great breakout potentials going higher here. I would love to get some bear traps on pullbacks right now on the S&P. S&P really gets some great charts. We'll talk about that tonight. Nasdaq is still a bit floundering. We're definitely bullish overall in the Nasdaq right now, but we're going to chopping around back and forth. The name of the game, and again, breakout pullbacks are going to be one of my favorite trades in the Nasdaq. But when you see the chart tonight, the Nasdaq is going to be all about trading the edges. You're going to really want to make sure you watch the video tonight because it's going to be all about awareness of where you are on the chart in the Nasdaq. It can be very easy to lose a bunch of money tomorrow and potentially make a bunch of money tomorrow. We get some big tech earnings tomorrow and a real nasty range. Not to worry, I love ranges. You will see why here as we go deeper into the video tonight. Oil is one of the most exciting charts we've seen in a while. Talk about breakout pullback. We have so many reasons right now on the oil that buyers have to be licking their chops right now, looking at this as a potential reversal, possible short squeeze. I'm going to give you guys a bunch of reasons for that. And we'll talk about how to turn this very strong move lower, how to maybe use stops as fuel for a squeeze back up into that range overhead. Very excited if you are an oil trader like we are. So, they're all a bit different, right? Each one of these markets are a little bit different, but boy, do they all give us some really great trades here. So we're going to cover all this. By the end of the video tonight, you'll have a game plan to make some moolah on Tuesday. Now, speaking of Tuesday, let's back up the truck a little bit. We got some news tomorrow morning. Housing starts at 8:30 Eastern time, so you want to be aware of that. But that really is not kind of the big headline stuff here for tomorrow. Tomorrow is going to be kind of the kickoff of earnings season. Tomorrow, we're going to hear before the open. We'll hear from some pretty big names, right? Bank of America, Johnson & Johnson, little company you might have heard of called Goldman Sachs, Lockheed Martin. And then, of course, tomorrow after the close, we've got Netflix, United Airlines, right? Lockheed Martin. We have quite a few big names coming. Really Tuesday and Wednesday this week. Now, keep in mind, this week is really just kind of the appetizer, the aperitif, if you will, for what is the biggest week, which is next week. Next week is known as peak week, and you can see a great breakdown courtesy of the earnings whispers, right? This is this week, right? We got a little bit more than, 50 there. Look at next week, right? Next week is the big week reporting for the vast majority of the biggest companies in the world next week. So again, we got some earnings coming out tomorrow morning. The most important thing that you want to kind of be aware of, unless you're trading the individual stocks, right? Unless you're trading Bank of America, Netflix stocks, if you're a futures trader, right, like we are in our trade room, the key is going to be just be aware there's going to be some extra volatility at the edges of the market, right? So before the open, into the opening bell, towards the end of the day, into the close, right? So that's the one key thing that you want to be aware of. One thing I will not talk about at any point is whether or not any of these earnings beat expectations or don't beat expectations, because one thing you'll learn quickly about earnings, it's very difficult to look at the number and make an accurate accurate prediction as far as how the market will react to this. We want to know when the news is or when the earnings reports are coming out before the open and after the close. But the most important thing this week and next week is please don't get too wrapped up in the actual numbers themselves, because we will be focused tomorrow morning and the rest of these next few weeks during earnings season about trading the reaction. The reaction to the news is all that really matters. So we're not going to waste too much time on what if it's higher, what if it's lower. Be aware, next 2 days, Tuesday and Wednesday, before the open, after the close, expect an uptick in volatility. And we'll talk more about that tomorrow morning in our trade room. And of course, at 8:30 Eastern time, right, are the big housing starts. We really don't have any major news during the session until Thursday and Friday morning. So it's really all going to be about earnings coming out before the open, after the close. And again, don't get too wrapped up. Don't spend your mental capital on fussing about what the numbers are, right? The charts will tell you everything that you need. Now, back to our charts, though, because as I've said the last few minutes, right, trade the reaction. The money is made on the charts. And guys, speaking of money, if you like making money, I would make sure you watch all the way through to the end of the video here tonight, because every trade I talk about on each three of these markets can be applied to your favorite market. So don't just bail on me after your favorite chart is done. You know me, I like to tie it all together, so I'll give you a good reason to stick around all the way to the finish. Jumping into the S&P first, we'll go S&P, we'll go Nasdaq, we'll wrap things up, of course, on the crude oil. Couple things first. This is an 8,000 tick chart. You can see all the time frames in the upper left-hand corner. They are all tick charts, so be aware of that. That is the 21 EMA, the exponential moving average. It's not the only indicator we use in our trade room, but it's one of the most important. And as always, I do like to include some higher time frame charts, some 60-minute charts, some 4-hour charts linked up down the description of the YouTube video. I like to use especially 60-minute charts. I like to use those as a directional filter to give me a little bit more context of, well, it makes it very easy to plan the best trades each day, right? So grab the higher time frame charts if you want to see kind of what I'm looking at as the bigger picture. Now, with that said, let's jump right in. What's the most important factor that we have right now on the S&P? There's a lot going on right now on the E-mini. The most important factor right now, though, is at the end of the day on Friday, we had that big pop-up, and that turned into a trading range for the bulk of the early part of the session. That is a bullish market into a trading range, and now we are rotating off of that low. Okay, we call this rotation off the low, pendulum swing, the amount we go below the range, above the range. The most important thing that you want to be aware of is that we have a long-term 60-minute bullish bias. So I'm looking at this through the lens of an overall bull market, and we have a very short-term bullish move already, right? So bullish in the short term, bullish here in the long term. Now, clearly, we've got some overhead resistance overhead, right? That's a bit of a concern. And there's a big question mark as far as, tomorrow's big earnings reports coming out before the open. So knowing this, right? Knowing that we've got short-term bullish, long-term bullish, a little bit overhead resistance, where are the best trades to look for right now? Well, I mentioned breakout pullbacks in the introduction. I'd love to get some breakout pullbacks, right? See this, right? See this momentum continue and then start using the top of this trading range, right, for a breakout pullback. That would be one of my favorite trades here for tomorrow, right? Continue this move going higher, okay, and then look for a breakout pullback off of that range high. I'm going to give you a couple different ways to make money on that as we go deeper into the video. We're going to flesh that out a little bit more here. Another one of my favorite trades would be bear traps, or if you're taking my free trading course right now, seller failure patterns, right? Trapping in bears, using things like channels, I really, buying using stops as fuel around any of these areas here, right? Again, we're overall bullish, which is why a pullback off the low of this channel. I would love to get a bit of a bear trap there, right? Off the low of that larger trend line coming in. And if we have to, some reversals off of that low. So those are my favorite trade for tomorrow. I'll tell you right now, there's not a lot of easy ways to be a seller on the S&P. You will see very soon tonight, though, there are some definite ways to be a short seller on the Nasdaq. Nasdaq is quite different, right, than the S&P. So now that you kind of know my ideas, my favorite trades here for tomorrow, let's kind of talk about this some more. A lot of times these slingshots, right, these kind of pendulum swings, a lot of times they'll keep on going higher. Now, if we keep going higher, I've got to be concerned about buying high up here. So the pattern of choice up here, the entry pattern I'll be looking for, if we do go higher here, is to use a trap setup. Now, these are the same trap patterns you guys are going to learn in the free trading course, right? So traps as we go higher. Now, the buyers ultimately, they are trying to make their way up to this big 42, 43 level. You can see that referenced on the 60-minute chart and the 4-hour chart I have linked up in the description. So we know where the market wants to go. They want to get up to that 42, 43 area. If we keep running higher, the name of the game on the way up is going to be bear traps or trap setups as we go higher. And again, just like you guys are learning in our free trading course. Then as we start getting up a little bit higher, now we start thinking about, we don't want to buy too high. And now I want to try to buy a pullback. This is where this trading range becomes a really great friend of ours. Now we can mark up these prior highs and we can start looking for that nice deep pullback. Now, on top of that, what I'll do is I'll go out, I'll look left, and try to find a trend line off that high, bring it down off that low. See how I do that? I draw the trend lines off the highs up here, and then what I can do is I can pin that line at the low, and it creates a channel. This is the sweet spot right here. Now, in this scenario, we have all of that bullish momentum. And usually that means there's a big bullseye to go back and retest that high. What I'd love to do in this situation is use my failure pattern. So get below the moving average, trap in some of the bears, right? Literally let the sellers try to short this thing and then use their stops as fuel, right? We call these failure patterns in the free trading course. You're going to love these, right? So failure pattern and then potentially a pullback pattern, right, off that moving average. We call these failure into pullback combinations, right? The target on this is to go back up and retest the high. So as we go higher, this is the general idea of what I'm looking for, right? There'll probably be a little bit of variation to this tomorrow, and we'll do it together in the trade room, right? But trap patterns on the way up, right? And then failure into pullback combinations, just like you're learning in the free trading course, which reminds me, I know that a lot of you guys have taken my free classes. You've learned these entry tactics. I love to get all the P&L snapshots, the winning trades in my inbox every week. But I'm sure if you're here for the first time today, if you're one of the few folks who haven't taken that free trading course yet, I'll put a link up there, pops up in the upper right-hand corner. Grab that link right there. Take that free trading course because a strategy you'll learn in that free video series will teach you a simple trick to know exactly where the winning trades are going to be that day. And I'll make it easy to start making money on your own account with 4 of my favorite entry patterns. That way you won't be missing the best trades each day. If you're tired of taking so many losses, definitely grab that link that popped up. Take that free trading course. You're going to love it. In that free video series, you'll learn more about traps on the way up, right? Deep pullbacks, how to use ranges, right? For breakout pullbacks. This will change the way you look at charts forever, okay? So that's the way I'm looking at this if we end up continuing going higher here. Now let's talk about if we end up going lower. Right? This is where things are going to be a little bit more, I wouldn't say difficult. Again, you want to think about this in terms of it's an overall bullish market. That's the lens in which we are looking for. So as we pull back right now, one of the most important things to keep in mind is this is a very strong move. And you can see it's very strong because look at the separation it gets off the moving average. You'll notice that we don't always get such obvious separation off the 21 EMA. We call these strong moves in our trade room. anytime we see a strong move in one direction, we expect to pull back and a retest of that level. You'll notice I've also got the top of that trading range. I have the bottom of that channel. So I like this whole area. The problem is clearly, though, we've taken out the pendulum swing. So I really don't want to just blindly buy it. What I'd like to do is use that same failure pattern, right? Get underneath the prior swing. That's where traps live, right? Try to get the bears to come in and get short right into the top of the range, the bottom of that channel, strong move up. Now, in this situation, we have to use those sellers against themselves, right? We want to use their stops as fuel, right? That stop run is what I need to punch this thing higher, take out the high, right? Take out that 89 high. So I like the idea of a deeper pullback, get down around, again, the high of that range, the low of that channel. This could easily swing back and forth. Sometimes we see these ranges, right? They'll kind of rotate back and forth here. So I have to be a little bit respectful of that possible rotation. You'll see an example of that on the NASDAQ here in a moment. But that's exactly why, rather than trying to pick the bottom on it, just wait and see what happens. Wait for the bears to come in. If they sell short, now you've got their stops as fuel, and you can use that failure into pullback combination like I mentioned before, right? So failure, pullback, you'll see a lot of examples of those, again, in that free trading course. Now, that's a pretty easy one. The next thing is what if we end up swinging all the way back down again? I mean, let's face it, we're at a level of resistance right now. We're at major resistance. We got a lot of earnings reports coming out tomorrow. Not as much next week, but still a lot of earnings here. So what if we were to roll off this high? Now, first of all, could I short that thing? Well, the only way to really sell short right now will be to use a bull trap, right? So as we go lower, we'd have to get the buyers trying a couple times, and you'd really want to make sure you're shorting a bull trap. Okay, these will also times, right, line up at the high of a new channel. So if you're looking at me going, man, I want to short this thing, okay, that's the way you do it, right? That's the way you do it. Now, again, I tend to filter my stuff based on that longer term directional bias because it's the easiest way to get lucky. It's the easiest way to get lucky bounces. It's definitely the easiest way to get big winners. But if you want to short off the high here, if you're anticipating a rotation back down, which is not guaranteed by any means at this point, the way you want to do it is a trap. Okay, and you'll see a lot of examples of that in the NASDAQ, right? The NASDAQ has a lot of these, and we'll talk about that here in a moment. That's the way you short this thing back down. Let's say, though, we do end up all the way back down to that low, right? We take out some of these lows now. We're still overall bullish. This will not change the overall directional bias, but it will change the short-term momentum. Okay? This is a great example of this would be a great place to be a buyer, right? Because you're overall bullish with a range, which again are magnets, right? Ranges are magnets above you. It's a great place to be a buyer, but momentum is not that great for the buyers. So in order for us to pick the bottom on this, in order for us to effectively buy with what could be a very strong move down, is you want to look for two different types of patterns. One is a crown reversal pattern. It's very simple. Bears try once to short, we go higher, bears try twice, and we look for some sort of bear trap. I call these crown reversals. They're basically a failure pattern with two tries and a trap below the low. We see a lot of these in our trade room. I have a lot of examples of those inside that free trading course that's again linked up in the description and up in the upper right-hand corner. That is one way to do it. The second way to do it is to wait for a retest, right? So strong move down, they pull back and they retest that low. Now, once they retest the low, right? Once they get that retest, then you can be a lot more aggressive. Because now the bears should have been selling here and taking profit at the low. In these situations now, we call these double bottom reversals, right? Double bottom. All you do is now let the bears try once, let them try twice. I don't necessarily need that trap low. It will be great, don't get me wrong, but I won't necessarily need it as much, right? Whenever we get a strong move in one direction, we expect a pullback and a retest, right, of that level. Once they get that, all the kind of big money, right? They're already in. They're taking their profit now. This is the small money, right? These are the rookies selling right into that low, use their stops as fuel, right, for a failure, back up into that trading range. Now, oftentimes, these get pretty good. Oftentimes, what happens is these will pop up, and you'll get this beautiful new channel. Draw off the highs, bring it down to that low, and then what do we always say? Traps, baby, or first test is the best test. This, in all reality, is kind of a dream scenario for the buyers tomorrow, right? They run it lower. The bears get caught selling right into that low. We let them try a couple times, use their stops as the fuel we need to turn this thing around. And again, the reason why we're trying to buy is because of that long-term bullish bias, range, support level, right? So we're trying to buy right here. And then if we can get that rally going higher, we draw that new channel off the highs and we don't miss that entry, okay? That's the one part about ranges. You don't want to miss that follow-up entry. It could be a bear trap like this one. It could be a seller failure pattern like I mentioned a couple times already. It could be a pullback combination, right? Any of the entry patterns you guys are learning in that free video course. All right, guys? So those are the ways in which I'm looking to trade this now on the S&P. And you'll notice, right, the only really way to short this is to look for that bull trap on the way down. I definitely don't want to short down here, right? Not at support below a range magnet. Look at the 60-minute chart and you'll see it's very difficult to call this a bear market right now. All right, that's the game plan on the S&P. How about some NASDAQ? Now, the NASDAQ is a whole heck of a lot less bullish. Let's put it that way, right? I wouldn't say the NASDAQ is bearish right now. I would say the NASDAQ is less bullish. And you can see that reference with the 60-minute chart linked up in the description, right? The NASDAQ looks a little bit punch drunk. We have Tesla earnings coming tomorrow afternoon. It makes sense, right? Big earnings reports coming up this week and next. So the NASDAQ is still bullish, but a lot more mixed. And we talked about how the NASDAQ is quite different than the S&P right now, and it really is. The most important thing you want to be aware of in the NASDAQ is you can easily see this bullish market, right, into a trading range. But what don't you see? You don't see that move down and that slingshot going higher. Look back at the S&P, right? Look at the S&P, right? S&P, move up into a range. See how you get that big drop down and now it, right? Slingshots running higher, right? That's a heck of a lot of momentum, okay? That's why I can trade breakouts. That's why I can find a bear trap and get long right there, right? All that momentum, that's the key. We don't have that on the NASDAQ, okay? So when it comes to a situation like this, if we don't have momentum to give us an edge, we have to create that edge with stops, right? Whenever I have momentum, it gets pretty easy. Right now, we don't have that momentum. That's why I said trading the edges is where the money will likely be the easiest to make on the NASDAQ until something changes, okay? What I mean by that is as we go higher, literally trapping in the buyers and selling back down again, right? As we go lower, trapping in the sellers and buying back up again. All right. Now, given it's a bullish move into a trading range, I mean, come on, it seems like the easier money is going to be buying off the low, right? But again, with a situation like this, it's just a very choppy range. There's a lot of resistance up overhead, support down below. I mentioned earlier, it'll be easy to get into trouble on the NASDAQ if you're trading around the middle. Okay. This is where you get into trouble. Okay. So you want to be aware of where you are on this chart right now. What's my favorite trade for tomorrow? That's pretty easy. My favorite trade in the NASDAQ for tomorrow is I would love to see this rotation continue. I would love to get us down in this area. And I would love to use a crown reversal pattern, a two-try failure pattern, right? Again, we are overall bullish. We're just a little more mixed right now. This move lower, if we can get underneath some of these levels, it's going to feel really bearish, right? This is a very slow time. This is a 5,000 tick chart, right? On a faster entry time frame, it's going to feel very, very bearish by the time we get down here. So these are the scenarios where you get a deep pullback, you let the bears try a couple times, and you use their stops as fuel, right? Like back here, we go lower, they try once, they try twice, stops get hit, and back up. again, I want that to be a pattern, but around the edges, right? Around the edges. Trap those bears in and use their stops as fuel. Okay. And again, be very careful trying to chase after it, because oftentimes these things, what will happen is it'll snap up and then chop all around in here, right? It can be a mess in the middle. So you really want to try to ultimately trade the edges, right, of this move. Now, how could I sell off the high here? Remember, it's not a bear market. It's a bull market. Again, a little bit less bullish than the Nasdaq, than the S&P. Look back. And you can see great examples of, and this is why I love to look back on charts and kind of pick up ideas, right? Look at these two areas right here. This one was kind of a freak of nature right there with that V top. But look at these two scenarios right here, right? What do you see happen? We go up, right? The buyers try once, the buyers try twice, and what do you see? A trap high. We just talked about this on the S&P, right? On the S&P, I said the only real way to sell short on the S&P was what? Was a bull trap, like that, right? Over here today, we go up, right? Highest part of the move. We pull back, buyers once, buyers try twice, what, right? Bull trap, okay? So this is the technique you're going to want to use to sell off the high, and really be very careful right now. Ideally, you want to go up, take out some of these highs, and then get the buyers, right, who are chasing after it, get them roped in, use their stops as fuel, right? If you try to go in and look for these patterns, right, around the edges, you really, really got to be careful, right? You know, you don't want, again, you don't want to be getting in down to the range here. Okay, what'll happen is it'll keep popping back up, right? Popping back up. So bears can keep on selling high, right? So my favorite trade in the NASDAQ would be if we end up all the way down at these lows, okay? And then again, rope in some of those bears, right? Let them try a couple times and use their stops, right, as fuel. Okay, again, basically a bear trap. It's a 2-try failure. It's just a little bit more advanced variation of the failure patterns you guys are learning in the free trading course. Now, along that same vein, if we don't have a lot of momentum going higher, we really need to get some evidence if we go up here, right? So on the S&P, for example, and I'm going to go back to the S&P again real quick. I apologize. We have all of this momentum on the S&P. Right? So we've already got that at our side. If we keep going higher here, we can use those traps, right? That works. And then once we get high enough, we start finding that deeper pullback. Ultimately, right now, we need this NASDAQ to prove to us that it has that same momentum. This is not the same market, right? It's not, and we're close to the S&P. So we have to either get a nice, strong rip running higher, right? And then again, kind of execute that same game plan they mentioned on the E-mini. The NASDAQ has one pretty easy objective. You got 13,348. Again, you can see that on the 60-minute chart. It's pretty easy to see. It's just a big high back here, right? That's exactly where the buyers are trying to go right now. I'll tell you, the 4-hour chart on the NASDAQ paints a very good picture, but we're still kind of mixed right now on the 60-minute. So if I can get some strength going higher, if we can get some momentum at our back, okay, now we can go out and execute that game plan, right? Shallow pullback traps. And then remember, this is the trading range, right? So just like on the S&P, think about where those highs are. Think about finding a new channel. I don't want to buy high, right? I like the fact that we're very bullish at that point. I like the idea of buying low with a bear trap, right? Trap set up. But I don't like the idea of buying high, right? Not into these major overhead resistance. What we'll do is now find that channel, mark off, right? Mark off that high. And again, like we talked about on the S&P, wait for that deep pullback. Get underneath the moving average, and again, I'm not going to try to buy right into it. This could easily look back here, right? It could easily run up. This is the NASDAQ we're talking about. This is a crazy animal, right? It could easily run up and dump right back. For all I know, right? Nobody knows what's going to happen on this stuff. All we know is how to put the odds in our favor, right? We know how to get the edge. And as I talk about in the free trading course, that edge is all we need, right? So at this point now, a lot of momentum now, right? Now we're looking more like the S&P, but now we've got to get those bears trapped in because again, they may try to short this thing back into that range, right? Ranges are, they're magnets, right? So get them below the moving average, get them trapped in, And then you've got the edge, right? That is an edge you can exploit to make money almost every day, right? Strong move, and the edge is pretty simple, right? Strong move in one direction. Strong moves are going to want to retest that high, right? Find the channel, trap the bears in, stops as fuel. Okay, short-term momentum, long-term momentum, everything agrees on it. I like that one a lot as well. All right. Now, be aware, right? Be aware if we were to, for example, right? Let's say we made this really strong run down. Okay. Remember, the stronger the move is, right, the bigger the two tries need to be. So if we get this really strong shot going lower, obviously we'll do more of this tomorrow in the trade room. But if we saw, for example, a real strong shot going lower, this is where, remember, strong moves, they're going to want to retest, right? This is exactly where a crown reversal would come in handy, right? So bears once, bears twice, crown reversal off of that low, right? Or strong move down, they pull back, they retest that low, double bottom, then we can get more aggressive. 1, 2, back up, right? Find that new channel, and we're going in back into that range here. All right. And again, I'm simply kind of dribbling, doodling right on the chart, but we'll do this later tomorrow morning. But that's the general idea. Be very careful down here. Be very careful, right? Shorting this thing down here, right? Bull move into a trading range. This is ripe for bear traps, right? It's ripe for bear traps, and you will learn why I say that inside that free trading course. The big question mark is if we go higher, right? Do we get the bull trap above the high for the short back down, like we've already seen a couple times in the last couple days, or do we end up punching, running, and then getting that pullback we want later on in the session? Okay, there are going to be some variations of this that I simply can't predict tonight or can't anticipate tonight because of earnings. So tomorrow morning, 8 o'clock Eastern time, don't be late. We'll take a look at the earnings overnight, update charts, and put a game plan to make some money. Over on oil, oil is a very interesting chart right now. I would definitely encourage you, if you haven't done so already yet, definitely check out that 60-minute time frame linked up in the description of the video, because that will really outline for you why this has to be a very desirable area if you're a buyer on the crude oil. We talked a lot about breakout pullbacks, right, already today. And this is kind of like the granddaddy of breakout pullbacks here right now. We had that big bull run up, right, early April into this nasty range. And then one day the market said, okay, we're going to go higher, and made this just rip, right, running higher. Lots of bear traps, right? Strong move up, right? Trap, strong move up, trap, right? Well, now look we are right now, right? We've pulled all the way back, right? All the way back. Ultimately to the high of that channel, of that range. Now, this is not the only part of it. When you go to the 60-minute chart, right, you'll notice too, if you connect these highs and off this low too, get a beautiful kind of 60-minute channel on here as well. And if you're a student of mine, you know why this area right here, right, these kind of 1, 2, 3 moves, you know why this is a very attractive area as well. I'm not going to give away all my secrets on these YouTube videos, right? So if you're a student of mine right now, you see that 60-minute chart, you're going to be thinking right now, okay, there has to be a lot of buyers who are trying to buy this area. I would also imagine too, though, that's a lot of bearish momentum. Look at the strength of that move going lower. And this is really where the challenge is. That's a very strong move down there for the bears, okay? So if I want to be a buyer, okay, I have a long-term bullish bias. Okay, so I want to be a buyer. I really have zero interest here in being a seller at this point, right? We don't want to be selling low. You want to kind of get in the mindset of you want to be buying as the market's going lower, and you want to be selling as the market's going higher. It's difficult. It's easy to say, but difficult to do. So as we're going, big move down right now, I have zero interest in selling down here. You don't want to sell as we're going lower, right? You want to sell as we're going higher, and we're not in that situation right now. So I don't want to be a seller down here. I want to be a buyer. I would love to go back up into that range right overhead. The problem is momentum, right? It's a great place to be a buyer, but a lot of bearish momentum. So what do we always say? Anytime we have a strong move down, what do we expect? A pullback and a retest of that level. Now, if we were more of a bear market, I would say let's short that, right? Because that could also be a breakout pullback, right? That's a range. Why couldn't that be a good trade? Well, it would be a good trade if we were long-term bearish. Okay, again, if you filter your trades to put yourself in the direction of the longer term or the 60-minute bias, I call it our trade room, you give yourself a much better chance of getting lucky, right? Get lucky bounce, not as many stop outs, and you also put yourself in a position where it's an easier trade to get a big winner. So I'm not saying you couldn't look for a short there, but I would rather wait for those bears to fail personally, right? Again, you'll make more money in a shorter period of time going with the overall direction. So we're anticipating those bears coming in. This is exactly where these three entry patterns, and I would say these will also apply to the NASDAQ and the S&P. One of them you know already is a crown reversal, right? So as we go lower or go higher here, one try for the bears. Now we may see them come in and short off that underbelly, right? That breakout pullback. They may try to short out that area, and this is exactly where a crown reversal will come in handy, right? So because we're so bearish short term, I have to let the sellers really be the fuel, right, to run back up. No pun intended. Okay, maybe a little pun intended on that one, right? So because we're so bearish, I don't have momentum at my back like I do on the S&P right now. On the S&P, can be a lot more aggressive, right? On the oil, I'd like to trap the bears in and then use their pain, right? Use their stops as the fuel to turn this thing around. I also anticipate you'll probably see some bears up here, right? I'd like to let them try a couple times and then kind of hit them with their own, a taste of their own medicine, right? Going back up into that range. Another one would be a double bottom. Right? Let's say the bears are successful. They run it back to retest a low. Then what do we do? Now all of the bigger players are short already. They're taking their profit now at the low. Call in the rookies. The rookies come in. They're going, oh, it's a reversal. Look how strong that is. Probably not, right? Again, not in the 60-minute time frame we have right now. Trap those bears in. Use those stops. This is a class. Again, I call these double bottom reversals. It's nothing more than a retest and then roping the bears in using two tries with a classic failure pattern out of my free trading course. Okay. And again, on these ones, don't forget, these will oftentimes pop up and begin to really run. Go out, find that new channel off the highs, bring it down off that low, go out, mark, look left. Look for traps below prior swings, right? Look for failures below the 21 moving average. Just don't miss that first test, okay? That's another really great scenario. And again, this is very similar to the NASDAQ chart we just talked about, the S&P chart earlier on. Like I said, most of these, one thing about trading is you don't need to have a dozen different setups. Get good at one or two markets, a couple core setups. If you want to make more money, as I always say, don't trade more setups, trade more size, right? So you can notice a lot of this stuff is repeating itself. It's because it works, right? Why would you try to spice it up, right? We don't want variety, right? We want consistency. We want confidence, and you get that by knowing good stuff. Now, the last one, and this would also apply to the NASDAQ and the S&P as well. If we were to, for example, right, V-bottom, right, off of these lows, for all I know, right? For all I know, this thing may just get bought up so fast. It may pop up and we may not get any crown reversal, no failure, no nothing. If we don't get anything, now draw a trend line off the high, right? Bring it off that low. And remember at this point, what's your concern? Buying high. Remember, we want to get in the habit of buying as the market's going lower. I know it's easy to say, difficult to do. So if the market V bottoms, and again, this same pattern could also happen on the NASDAQ, below the edges, on the S&P, down below trading range lows. This could easily happen. As we're going higher, that brain of yours, that little voice in your head is going to be screaming, you're going to miss it, and this is where you have to have the discipline, the impulse control, not to let that FOMO lizard brain of ours, right, do trading for you. Remember, buy as we're going lower. So how do we do that? We mark up prior swings, and we try to get in off prior swings. Traps, right? This is the definition of a situation where you need a trap, right? Because you don't want to be buying as we go higher, because the higher we go, the more likely you're running into resistance, right? Let the bears get short and then trap them in, right? And then use their exits as get caught on the wrong side of this momentum move. All right, guys, beautiful spot, right? Beautiful spot here for for a breakout pullback right now on the oil. Now, there is definitely a possibility, who knows? Oil's a wild market these days with the situation in Ukraine, supply chain constraints, blah, 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 SPR. So if we do end up rolling over, right, into this trading range, I can see that happening, right? I mean, I'm nothing's ever foolproof. If it does happen overnight, we'll kind of regroup tomorrow morning. We'll put a game plan. I can't, unfortunately, rehearse every possible scenario here in these videos and be here all night. All right, guys? So be aware of that. That's my favorite trade for tomorrow on the oil. Now all we need is a little bit of time. Good night's sleep. We'll come back tomorrow morning, 8 o'clock Eastern time. If you are trading in the overnight, if you are trading, don't forget those earnings, right, coming out. Again, be careful pre-market, be careful post-market right now, really the next couple of weeks as we get through the bulk of earnings 2 weeks from now, right? By the end of next week, we'll pretty much be, through most of the big earnings in the U.S. for Q1. All right, guys, let's wrap it up. Great job today. This video is getting a bit long here than I'd like it to be. Have a great rest of your evening. Don't forget, all the free course links, all the trade room links, all the extra time frame links are all linked up in the description of the YouTube video. If you have any questions, if you need help with anything we talked about tonight, don't be afraid to call the office. I'll be here to help out every step of the process. Use live chat. We're always here to help out, guys. If you need help, just reach out for it. All right, guys? Hope you learned a bunch here tonight. Thank you so much for watching all the way to the end. Now get out of here. Get a good night's sleep. I will see you tomorrow morning, 8 o'clock Eastern time in our members trade room. If not, same time, same place, back here tomorrow night. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.